Hello. After almost a decade of debate, the new regulations in the money fund industry are coming into force next January 2019. All the existing funds are going to change, and the fund managers are already planning their new products. So we've asked the leading players in the industry to discuss the regulations, what they're doing, and importantly, what you, the corporates, should be thinking and doing. You can read all about it online or in the magazine, the full report that is, but here are just a few of the things they had to say.
I think all a great discussion we've had. I think we've focused on all of the available options that corporate investors are going to have under EMEA money market fund reform, and certainly the providers in the room are putting together a landscape of alternative choices for clients. It's good to see that there's consistency in some of the approach that we're all taking. And we're excited to just get it over and done with now, to be honest.
So key takeaways from the discussion today were that it was always good to have a meeting with our peers and then talk about the industry changes and events. What we have talked about that is quite interesting is that we are all thinking the same way, which is good for our investors. I think we are all doing the right things for in terms of education, in terms of how we're thinking about the product structure and the offering. We do say that there are still some unknown events around what the reform could look like in the end, specifically to share cancellation and some of the product offerings. So I think broadly it was a good meeting to have, and I think we should have more of these when we do have significant events in the industry.
Key takeaways, I would say it's a complex change, but it's a productive change and one that will create opportunity, the reform that we're all going through. That there's going to be a need to really focus on clients and assisting them through the process of what the change means and how that might impact their investments, or alternatively what they need to do within their own policies to adopt to the new regime. But overall, I would say that it's good for the investor. It's going to show a much more secure way in which the fund managers can operate, less of an onus on rating agencies, more on the fund managers, ensuring that liquidity levels are increased, ensuring that security of capital is increased. It's all positive outcomes, this reform, and I think that will sit very well with the customer. I think that's the general theme, that this is a positive move.
It was a terrific discussion. I think really the main takeaways is that, money fund reform is coming. It's going to be effective, January of next year. And for a corporate treasurer, I think the main thing to focus on is just get with your advisor, make sure you understand the products that are available, what's happening to your money market fund, and make sure you're doing everything that you need to do to be ready for when the reform rolls over, whether it's the last quarter of this year or January of next year.
We came out and had some really good discussion around what corporates should really be focused on in today's discussion. And the key components are quite clearly, from my perspective, remaining close to your investment manager through this period so that you can understand what the key changes are and how they're going to potentially impact you. You also want to ensure that you are taking the opportunity sooner rather than later to ensure you're updating your investment guidelines so that you can make informed and appropriate investment decisions in a post-reform environment. In some cases, that might also require you having to review your systems that you have in place to ensure that it can actually support the investment choices that you think are appropriate for yourself. But what I would definitely say is that the reforms coming out are certainly positive from an investor's perspective, offering additional safety measures as well as additional transparency, which I think is going to be incredibly helpful for our market.
We've discussed today, and I think the key thing here is to start looking at your investment policy. If you haven't started the work now, then start that engagement with your investment boards, your investment committees, any external legal or auditors that you may need to run through what your approach is from an investment policy. Please get started on that work now. Words of encouragement around the new reforms are that the key thing to remember is that not too much is changing. Fundamentally, if you are comfortable with the funds you are using today, use that as a comparison to what the new landscape will have in place. If you take the low volatility NAV structure as an example, most funds out there are going to continue to be rated. Again, if you look through to the underlying investments that fund makes today versus what it does in the future, The main difference you'll probably see is a slightly more conservative approach in terms of the amount of liquidity that's held in the portfolio. So if you're making that argument again to boards, external auditors, it's not that different from what we do today. If anything, it's a little bit more conservative than what we do today.
Yeah, I would start with, as products are going to be different and we're going to be offering different components of the vehicle wrappers of money market funds, the corporate treasurer should really start looking at their investment policy guidelines if they have not done so already. That's going to be a critical step for their corporations to be investing in the money market funds today and in the future. They should definitely think about how to build those policies to be flexible to adapt to future change, as new products will come online and current investments that they have today may not be suitable for tomorrow.
Take the opportunity. It's a moment where policies can be changed, and it takes time to change policies, committees and approvals, signatures and so on. And I think this gives all of those investors that are used to working with these types of tools the opportunity to look at their policies, to change them, make them fit for purpose, look ahead, not just for today. And I think that's a good opportunity for the corporate and the institutional space to look at how they adapt that.
Money market funds are just a terrific investment option in the front end of the curve, and especially for a corporate treasurer that may not have a large credit staff. You can buy, a money market fund, whether it's AAA rated or not, and to be able to get a diversified, safe, expertly managed product that's a terrific liquidity tool for a corporate investor. And so our outlook for money funds, there's always going to be a front end of the curve. There's always going to be issuance in the front end of the curve, and so a money market fund is just a terrific way to get exposure to a lot of different credits and different investment views in the market. That's a highly liquid, very safe product.
So again, one of the key topics of debate and discussion for us is what is the future of the money fund industry in a post-reform environment? And I'm hugely passionate about the fact that money funds offer a sustainable investment solution for investors in market conditions and regulatory changes that come and go. So I think it's always going to be a sustainable solve for investors looking for principal preservation and liquidity ahead of any other investment objectives.
The landscape under European money market fund reform gives investors a great amount of choice, and I would encourage investors to sort of look at their investment policies, create quite a fluid structure, and maybe have broad wording around the use of short-term AAA rated money market funds.
I think choice for corporates is going to be good. It's going to become better. There's going to be more scope. There's going to be better product range, and I think it will essentially, fund managers will look to create opportunities that will fit in with the desired outcomes from the investor base, whatever those outcomes might be. That certainly is a good thing. Yeah, I think future of the industry, I say is positive. I think for those of us that are committed to the industry and committed to the change, I think the outcome's going to be good. I think there's going to be a great opportunity to service clients, increase cash balances going forward. I think that the scale of the larger funds will find that easier. I think perhaps the smaller funds within the industry will find that perhaps a bit more difficult. But generally speaking, as an overall, I think there'll be a very good outcome for cash going forward. And I think it's a very viable alternative to bank deposits and will continue to be so.